What tends to happen at the beginning of your trading career is that you believe that trading is like a mystical thing and you have to do some sort of rituals to be in a position where like you're overcoming fear and greed. But the easiest way of overcoming fear and greed, it's data collection. Right. So when it comes to overcoming fear and greed, what tends to happen at the beginning of your trading career is that you believe that trading is like a mystical thing and you have to do some sort of rituals to be in a position where like you're overcoming fear and greed. But the easiest way of overcoming fear and greed, it's data collection. Data collection is extremely important. The reason for so is because why are you fearful in the first place? Well, you might be fearful because you don't want to lose money. And why are you greedy in the first place? Because you're probably in a position where you're making profits and you want the market to keep going in that direction. So in theory, in trading, you get paid to wait and you're waiting for your right setup. What people fail to understand is that your setup doesn't turn up every day. Your setup doesn't turn up every week. Sometimes your setup might not turn up for a whole month. In fact, last September, I didn't even trade for a whole month because my setup didn't turn up. But in October, when it did, executed 6%, and we had we were back up and running again, you could say. Now, to beginner traders, it might be a little bit hard because obviously they want to make money quickly and they want to be in a position where they're growing their account quite quickly. But what you tend to realize once you gain that little bit of experience and you gain experience in looking at a certain setup, 4, 5, 6% on a 300, 400, half a mil worth of an account, that's life-changing money to an extent. So that's where you start building the patience and you start building the consistency in waiting, because you start to understand that, hey, look, I don't need to entertain myself in the market and I don't need to be in a position where I'm taking so many setups, because when the right setup comes, I can make a vast amount of money. So what's really difficult at the beginning is having that patience. Like I said, because you want to be in a position where you're growing the account as quickly as you possibly can. Why? Because you want that money. Who doesn't? But you need to be patient at the beginning, because the same way that you're going to be trading 300, 400, 500k is the same way that you should be trading your £500 account, your £100 account, or your £200 account. Because it's that same level of patience, of waiting for your setups, understanding your setups, waiting for the right entry, waiting for the right exit is what makes you a disciplined trader in the long term. And I'm sorry to say it, without patience, you will never be a disciplined trader in the first place. Right, so overcoming fear and greed. At the beginning of your trading career, most people believe that trading is a little bit mystical. You have to do some rituals to eventually overcome your emotions. I think the quickest way and the best way to overcome emotions like fear and greed is data collection. A lot of what we do is based on stats and data. So why are you fearful in the first place? Maybe because you don't want to lose money. That's a granted. No one does. But you want to get to a place where you understand the nuances that the market is going to throw at you in regards to your setup. And you also need to understand the limits of your setup as well. Why do people get greedy? They want the market to keep going in a certain direction, and then the market reverses and it goes against them. But with that data collection over a large period of time, you'll be able to understand how much you can take out of the market, when is it time to cut your trades, and when is it time to let your trades run. None of that can really be done without you going through a setup and looking at that setup and trading that setup for maybe 20, 30, 40 times. You want to build a large sample size. That large sample size will give you enough information in there to say, okay, this is a time for me to be fearful, therefore I want to cut the trade, or this is a time for me to be hopeful, therefore I want to remain with the trade. Why? Because, the market keeps giving you the same patterns. As we know from Mark Douglas, chapter 1, the market keeps giving you patterns with statistical reliability. Statistics. What is statistics? In theory, the study of events over a large sample size. So you want to get to a place where the data collection automatically gets rid of the need of a feeling of fear and greed, and you're just operating from a place of, I understand what I'm looking for, I understand what I'm doing, these are my entries, these are my exits, and you pretty much become impartial. The role of discipline in trading. Discipline is, in theory, almost everything in trading. There is obviously the book Mark Douglas, The Disciplined Trader, where it explains some of the attributes that you require to be a competent trader, you could say. But discipline is one of them. Well, discipline is one of those attributes. Why do we need discipline in trading? Well, first of all, number one, the market has thousands of perceptions, has thousands of ways of how it can be traded. But the new trader is not aware of those perceptions, is not aware of what rules they may need to be in a position of attaining consistency. Because the real goal in trading is to attain consistency. You can't attain consistency without discipline. Why? Because consistency in theory is doing the same thing over and over and over again, irrespective of the outcome. You need to be a disciplined individual to attain consistency. The reason why I say that is because, once again, we live in a world of possibilities and probabilities when it comes to trading. Obviously, we lean towards probability, but probability doesn't mean certainty. So there will be times, obviously, depending on what setup you trade, where you may have a 50, 60, 70% win rate. That means that maybe 50, 30, or 40% of the time you might be losing. A disciplined trader will take that loss and be impartial about it and execute again tomorrow if the trade or if the setup comes up again. Whilst an undisciplined trader will start making psychological mistakes, will start over trading, revenge trading, being in a position where they are irrationally taking action in the market, leading them to a place where they go on tilt, you could say. Whilst the disciplined trader completely understands completely understands the game, understand that it's a numbers game, and understand the role of probability. Therefore, keeping their emotions in check, not allowing their ego to take over, and being in a position where they remain impartial again towards their next setup. So when it comes to trading, you need to adopt a learned mindset. You need to stay learning. Now, I'm going to be extremely clear. It's not learning about new setups or new way of trading. Of course, that can be done, but it's more about learning about yourself. That's what it is about. Trading is really and truly a mirror of your inner thoughts, your behaviors, and the way that you perceive the world, you could say. So you probably unveil a lot more through your trading that you would anywhere else. So you need to be in a place where you're constantly learning, not just learning about yourself, like I said, but also learning about yourself. And that comes by having that mindset of being open enough to say, hey, look, I need to be humble enough and understand that the market can do anything that it wants anytime, which means that I have no control over the market. But what I do have control over is myself. And the more that you learn about yourself, the more that you be in a position to attain consistency. Consistency, it's what every single trader should be striving for, to be in a position to actually have half of the chance of making it in this game. And that doesn't come without learning. That doesn't come without learning about yourself. That doesn't come without learning new ways of, journaling, new ways of collecting data, new ways of collecting information, looking at information in different ways, actually, and seeing how you can optimize your system, how you can optimize ways of doing things, and frankly, how you can optimize your own trading business, to be honest with you. And having that constant reminder of being in a learned mindset, it's what enables you to keep growing, stay growing, and eventually grow your account as well. So how do we build resiliency? Well, I believe the way to build resiliency is done by repetition. Repetition is the mother of success. The first law of learning is repetition. So I'm sure people still remember like nursery rhymes or your ABCs and so on and so forth. Why? Because they repeatedly said sung the same song over and over and over again until it's stuck in their head. So when it comes to resiliency in trading, you need to be in a position where you're repeating, first of all, the same habits, or you could say the same rituals, waking up, looking at the markets in a certain way, being in a position where you're looking for the same variables again and again and again and again. Secondly, your journal, which is in theory your mirror, you need to be holding yourself accountable to where every single action that you do take or you do not take will lead to your performance in the markets, which puts you in a place where if you decide not to take a trade or you decide to overtrade, you should hold yourself accountable and knowing that, hey, look, we need to move away from this sort of behavior. And that comes once again by looking for the same variables in the market and adhering to how you should behave when those variables do turn up. And another thing, I truly believe you got to be listening to audiobooks multiple times. You know, sometimes just, impressing your subconscious mind is probably one of the best ways to get away from bad habits, getting away from doing things that you shouldn't be doing in the market. Therefore, building that resiliency and that discipline and that resiliency to stay the path, stay the course, because it's very easy to be maybe a new trader with a new setup, taking a couple of losses and deciding to completely go elsewhere and look for a brand new way of trading, keeping traders into what is called the cycle of doom. Keeping traders into the cycle of doom. What's the cycle of doom? I don't know. A trader goes into a new setup, they try and trade it, fails a couple of times, they get a brand new setup. Fails a couple of times, brand new setup. Fails a couple of times, and before you know it, they think that they need to attain more technicals to become consistent instead of being in a position where, hey, look, this is the method that I'm going to trade, and I need to just run the course, collect the data, and be in a position where I attain not only trust in the setup, but trust in myself to trade the setup. And that builds resiliency in the long run.